Thank you so much, Josh Zhang, for joining us today. Very excited to have the conversation here. I mean, just a couple different things to think about here. I mean, I can start off with the boring side of things. Office hours, we help out individuals think through next steps. Banking to buy side is a good portion of what we do. We help individuals break into banking. We do a good amount of associate training programs as well. Honestly, these days, I think we work with individuals age like 16 up to like almost like 36.
That early? I'm just curious. They're already interested in banking or private equity?
We have a couple people right now that just placed for on-cycle 2024, right?
Wow.
For 2 years out. Josh, we have a couple people right now preparing for on-cycle 2025.
Wow.
Yeah, kids came inbound and they were like, hey, like, I know it started early this year. I'm trying to go to a mega fund. I have a feeling it's going to start within the next year. And they're still like senior year, graduating, right? Going in.
Start them young. But yeah, I've heard of that kind of trend of it's almost like a race to the bottom, right? Of how early you start. And so you're saying these are candidates that haven't worked full time yet.
Started.
And they're recruiting for their second job.
They're recruiting for their second job. They haven't even started their first.
Wow.
But thank you. Thank you so much for joining us, man. Honestly, we'll love to get quick background on your end as we get into this. Josh is a really good buddy, arguably, I'm going to be his best man at his wedding. He just hasn't told me. But very excited to, of course, bring him on board here. We met out in San Francisco and we can get into this as well, but we'll love to learn more with a quick background on your end.
Yeah, of course. So I'll start with just what I'm doing now. So again, Rohit, thanks for having me on. Big fan of office hours and this podcast and webinars that you throw. I think it's super informative. I actually wish this was around when I was in banking or before. I feel like I would have been a lot more informed going into my interviews and what I was doing, not just to pander because I'm on your podcast, but I think coaching is always, an invaluable service, whether it's from, you guys, mentors, peers, friends, whatever. You're a personal coach of mine too, and vice versa, I know. And so it's something that I can't encourage enough for the listeners of this podcast or just anyone. But yeah, so I'm the director of investments at Four Corners right now. Four Corners, or the full name is Four Corners Property Trust. We are a publicly traded net lease REIT. And I know I just said a bunch of words, and there's some listeners that might not understand or fully be in the know, just like I was before. So a REIT is a real estate investment trust. It's just a type of real estate holding vehicle as an alternative to, a private fund or private equity. And net lease is just a lease structure. And I know you and I have talked about this before too, but it's a type of lease structure that maximizes sort of tenant ownership and tenant management and really prioritizes passive landlord ownership as well. And so that's what I'm doing now. I know you already mentioned my bio before, but I was at Goldman doing real estate investment banking prior to joining Four Corners, and went to school at Harvard before that, and can go as far back as you'd like, but I'll probably stop there.
Love it. We'll get to all of this, in all honesty, over the next hour or so here, and definitely let us know how you're doing on time. But if we take this a step back, right, you brought up a really good point, and of course, not kind of like the self-plug around like office hours by any means, but one of our coaches was telling me this today. She goes, well, maybe I was in like the bubble of like, call it central New Jersey, but we used to pay like $7,500 for SAT tutors. And it was just like, if you get the SAT right, they'll literally potentially obviously set you up for a good institution, college, school, what have you. And that can borderline change the trajectory of your career, of your life. So Josh, I mean, you definitely had coaches along the way, whether it be formal or informal, right? Like mentors,
sure,
people to look up to. And we've definitely discussed this quite a bit. Can you speak a little bit more around how it was getting into Harvard? Is that something that you had like really planned for? Is that something that it was just kind of like, so your sister went there as well?
Yeah. So I think that's a great point you make, because really, I think it's not only about coaching to say like, hey, here's how you should do this, and here's an invaluable skill that you should learn, but it's almost even letting you know what possibilities are out there, right? And so, I was fortunate enough, exactly as you mentioned, to have a family that prioritized education. And my older sister actually went to Harvard. And so she was, I guess, one of the very first coaches for me, in addition to my high school counselor. I know there are probably tons of unsung geniuses out there who didn't even know the possibility of higher education or of, these prestigious private institutions that, if you went to a public school like myself, they didn't come to your school to recruit often, or they weren't always in touch with these counselors. And so it was really up to us to be proactive in outreach to them. And again, fortunately for me, I've had had people in my lives who I've seen as both role models and accomplish this. I knew it was a possibility. I knew it was possible for someone like me. And after that, it was just the easy part of just getting great grades, awesome teacher recs, and standing out amongst all the other candidates. Yeah.
How was the environment there? Was the real estate interest something that came about, if you don't mind me asking, through Goldman internship? Did it just kind of happen?
Yeah. So I thought Harvard is still probably one of the most impactful, both communities and experiences I've had. It was an awesome experience, but and Harvard will admit to this themselves, right? They don't cater you to any specific job, vocation, or even skill. Their thesis of a liberal arts education is really how we're going to teach you how to think, right? And how to learn. And so it was an incredible experience from that standpoint. But at the time, there were no real estate classes. There were really no finance classes either. My major was economics. If you wanted to learn finance, if you wanted to learn accounting, you would have to take those across the river at MIT and cross-register. So for me, the real estate experience was not kind of bred at Harvard. It was, and I might have told you this story too before, it was kind of through a tangential way. So I knew I wanted to go into finance, and I had a rough idea that I wanted to go into investment banking. And so I did various investment banking internships while I was at Harvard, explored a bunch, did Credit Suisse Hong Kong, did Barclays in New York. And after that, it was after my junior year internship, now this was the summer of 2013, was when Detroit filed for bankruptcy. I'm sure you remember this. And as you know, I grew up around the area, and I suddenly had a feeling that, hey, I wanted to do something about this, or this is something that I feel like it galvanized some sort of interest in me. And so me and two other friends, we came back to campus and we're like, let's do something about this. And we started a social venture called Revive Detroit. And yeah, we were three kids with laptops trying to solve a profound municipal problem, and got some encouragement. We won, Harvard's Igniting Innovation Challenge. There was a pitch competition, got some seed funding, and started going through this before we realized we were way over our skis, right? But one of the good things that came out through this experience was that I got to meet a lot of cool people, and I was talking to almost anyone in real estate that would speak to me, because that's something that I needed to learn a lot about if I wanted to help rebuild parts of the city. And so Harvard had this really, really cool tool that I hope they still have, but it was called Crimson Compass, and you would log on and you would type in, you could filter by class year, by industry or whatnot, or by region, and they would show you a list of alumni that were willing to talk to students. Wow. And I think that's one of the coolest things that Harvard has to offer, right? And, you would reach out and maybe...
Alumni book. It's an actual platform?
Yeah, it's almost like, a Facebook. I don't think they had pictures, right? But for alumni. And it was, you're told not to spam, right? You can only send X amount of emails or outbounds a day. But this was a tool that if you were a student like me who is starry-eyed but didn't really know what he was doing, wanted to learn more about real estate, I could see, oh, hey, here's a Harvard alum in Dallas, and this is exactly what happened, who's in real estate and is willing to talk to me. I'm going to reach out and see if he could spare some time to tell me about the industry, what he's doing, et cetera. And one of those alumni, his name was Jeff Frank, still a mentor and a coach of mine today, but he was in Goldman's group. I had a great conversation with him, and it was largely through that I wound up with an interview. Now, when I first talked to him, I was telling him all about the startup I was doing and had no interest in Goldman. And a few months later, I realized I should probably call this guy back and see if he could offer me a job.
And you got to Goldman, and I'm sorry, so Barclays before that, is that right?
Yeah, so I interned at Barclays my junior summer. I did sort of this Revive Detroit thing during the end of summer and the beginning of fall, and I didn't join, or I interviewed with Goldman kind of late fall-ish and kind of committed to them then. But yeah, that's where I started full-time doing investment banking. The name of my group was REFG, which stood for the Real Estate Financing Group, also known as the CMBS Group at Goldman. Now, CMBS is a bit of a misnomer. Now, it's largely what we do, so not entirely, but our group, especially at the time, we did a lot of balance sheet lending as well. But it was generally the lending group of real estate, and that was a cool experience because one, you got actual asset level experience versus like a coverage group. You're really just advising companies, which is not saying you don't get good real estate experience, but you're getting more corporate experience that just happens to own real estate versus actually understanding the underlying real estate. But also on the financing side, you're just seeing a ton ton of deal flow. And, we saw, I covered industries, the large industrial portfolio. We did the largest CMBS 2.0 acquisition financing of CMBS since, the financial crisis. And that was in-course platform with GIC and Blackstone. We did mall portfolios, office portfolios, hotel portfolios. Funny enough, the only sector I probably didn't cover was net lease, where I am today.
Wow. I love it. And honestly, I guess natural question, how did you get into that?
Yeah. I think I had a little bit more time, but I still remember when I was in banking and it was like a cold February New York day. And we suddenly got all these emails from headhunters saying buy-side recruiting has started. And I know you're living and breathing this every day, but being a second, I think, right into our first year, actually still analyst at that time. And you just had a few months under your belt. You hear this is coming and everyone's just scrambling, stressing or freaking out or excited as well. Right. And, there are some folks that have been practicing LBOs and models for months and other folks which were like, I don't know what to do. And so for me, while I had some coaches, as I mentioned earlier in my life, tell me about college and stuff, I didn't know as many people that have done this traditional finance route. So I didn't really have people that I could count on for, how do I prep for buy side or private equity recruiting? But, as I was kind of going through these interviews, I kind of realized as well, I don't know if I want to do just, go to a typical private equity shop or a hedge fund where I know you've mentioned this before, the additional 2 + 2 + 2, right? Do 2 years at Goldman, 2 years of private equity, 2 years of business school, then 2 years somewhere else. I was pretty set that I wanted to go somewhere where I could really just accelerate myself and launch my career, but also know that I have a home for a while. And I had a really good piece of advice from a mentor of mine who said, you should pick your company based off your boss, right? And don't find your boss or don't join a company where your boss is just going to be someone who was born a year or two earlier than you, right? And when you're early on in your career, I think it's absolutely fine to have a boss that's just a couple of years older, who's maybe just a senior analyst or a senior associate, because at that point, you don't know anything. You're just learning, and a couple of years of experience still really matters and makes a difference. But as you progress your career, you really want to learn from someone that you think is highly intelligent, that is a creative thinker and a critical thinker at that. And so I talked to a few different firms and shops. And when I had the conversation with Four Corners, I knew right away our CEO, Bill Linehan, who I was introduced to, he was the guy that I wanted to learn from. And I would be reporting directly to the CEO, learning directly from him versus, and nothing against this, but maybe just another senior associate or a junior VP at a private equity or a hedge fund. And, that was really a compelling story for me. I had not done anything in net lease prior, haven't done anything in restaurants, but it was a chance to kind of join a company at the ground level and really launch with. That was largely the most exciting thing for me with Four Corners.
That's awesome. Yeah, that makes a lot of sense. And I think I resonate with that quite a bit, where it's like you're really joining, especially because it comes down to people.
Absolutely.
You're joining the organization, and sure, you might be passionate about the mission as a whole, the work as a whole, but the reality is you have to be passionate about the people. I'm a big believer in that, which means effectively that takes a lot of interview, and that takes a lot of engaging and interacting and getting an understanding of how do I know this person, right?
Yeah.
Really.
I would just add on to that and say that you're exactly right. In an industry or a skill such as investing, where it's such, a broad and kind of lifelong skill, when people ask me, I almost told them that you should treat your job as like an apprenticeship, right? Something as broad and lifelong as that, find someone where, you're willing to learn from them for, not just a year or two, but for the next 5 years or 10 years. And what's really going to accelerate you when you have a strong mentor and you treat it like an apprenticeship to really craft this specific skill. I thought that's been super valuable.
Phenomenal. How do you think about some of the companies these days? It doesn't happen all that often, right? But what if your boss is younger than you, according to what you just said?
I think, initially, if you were to ask 22-year-old Josh, you'd be like, well, how does that make sense? How would they know more than you if they're younger than you? But I have met some extremely brilliant young people in my life. Yeah. And I think now have the confidence and my own humility now, where I think that's totally fine. I would just caution, I think there are a lot of companies where there are bright, hungry CEOs that are young who are really hungry and obviously very accomplished and bright, but they might not have the experience. And I think there are times when some people overstate, their drive or their passion for actual experience and accomplishments. And that is something I'd be wary of, but totally fine if someone's younger than you. We can all learn something from someone.
Yeah, I'm a big believer in that as well. As we kind of jump into this, and we have a couple questions that we can get to in a little bit as well. Josh, if you don't mind me asking, how was it at Goldman back then? What you're able to say, right? And kind of like, what are your thoughts today as you read about whether it be a Goldman, whether it be banking, whether it be working with juniors during the pandemic? There was this massive, call it like, not even necessarily like a correction, but you had individuals that, of course, well, training was difficult, right? Yeah. Learning and working from home was difficult. So you have individuals that necessarily may not have gone into the office during banking. How would that have differed compared to like when you did it? And then, of course, individuals going into buy-side roles literally as like their first in-person job, right? The world has effectively changed quite a bit. And honestly, the gap over the last 2 years has really affected people fresh out of school.
Yeah. So sorry, the question was, how is my experience at Goldman and how that's changed?
Sure. And then, of course, just getting your perspective on like juniors today, nothing, of course, like a cynical tone or anything of the sort.
Yeah. So it's funny because this is actually a big topic at our company right now as we're recruiting and thinking about expanding the team. When I was in banking,
we can help with that, by the way.
Oh, yeah. Let's talk. When I was in banking, 5 days a week, if not 7 days a week job, right? You were in the office every day. You were there, by 8 to 9 a.m. every day, and you left. It varies. I always told people on an average of 11 or 12 p.m. with a standard deviation of 3 hours. And so in that part, I'd say probably has changed a little. And I think that's for the better, right? Because I've also had people tell me before too, that investment banking is a night job. You just have to be there during the day too. And I think, prioritizing mental health, prioritizing work-life balance, prioritizing just treating your juniors right and valuing time is all important. But I do think, those days where you were sitting, in the pit with all or on the desks with all your other fellow analysts and associates, you're really learning, not to be cliche, but through that osmosis, right? You're absorbing things through a sponge and you hear stuff that you've never heard before too. It's like if the best way to learn a foreign language, right, is to go to that country and just live there for 2 months, 6 months, a year. And you will absorb way more than if you are just, learning from an online course or even learning through a classroom. And I believe that's 100% the case early on in your career too. I do know that the pandemic stay-at-home orders affected that a bit. I do know there's some companies where it's still relatively remote. And for us, I think that is a big consideration. I'm not saying it's not possible. There are definitely mature candidates. And we've had analysts within our company too, where we were completely remote and they did a fantastic job, still learned a ton. And I thought still had a good experience. But it's a big consideration for us if we see that someone has been remote the whole time. Because, we've interviewed candidates where they said they've met their team or their manager twice in person, right? And I'd have to imagine, now I don't have any data or facts around this, but I'd have to imagine doing investment banking remote is a different experience than the in-person experience and probably not the full experience either, for better or worse.
The bullpen, the friends that you made during the time there, school remote would suck.
Yeah. Exactly. Not even just from the educational
keep in touch with. Sorry, right?
I totally agree with that. It's not even just the educational professional aspect. It's I've told you this before too. The other analysts and Goldman class, right? They're coming to my wedding. You've met a bunch of them. Like these are people that are lifelong friends. And yeah, you can definitely still have developed that repertoire and be friends over a screen. But I think, the inside jokes of that you used to make when the seniors left, or really understanding this was a person that really helped you when you were there late night, or even as simple as this was the analyst or the associate that you would just go on walks to grab coffee or lunch with. Exactly as you said, it's that whole experience, both personally and professionally.
100%. No, I think that does carry a lot of weight overall when it comes to, of course, working in person versus doing anything remote in that capacity. Let's take a look here. If you don't mind, we're going to answer a couple of these questions and then continue along.
Sure.
Perfect. So first one here, thoughts of starting a career in real estate IB versus commercial real estate brokerage. And I know I'll talk about this a little bit as well, since brokers clear a lot of cash, but well, many of them have in the last 5, 6, 10 years, but we'll love to learn more from you.
Yeah. Now I'm going to be biased because I did I did real estate investment banking. I would say in investment banking, you get 2 types of professional experience. You get first, just the hard skills, right? You learn how to model, you learn how to underwrite, you learn how to build complex, both Excel models, but also mental models of how to think about problems, how to think about financials. And you do a lot of this analysis and underwriting. That's one component of it, which are invaluable skills, right? The second part I'd say is you learn a lot on just general professionalism, right? Like if you were to walk around New York, you could spot a banker from a mile away, especially if this banker was ever in like a Cleveland airport doing a roadshow, like he or she would stick out like a sore thumb, right? And this level of professionalism, like being maniacal on if there are periods at the end of your bullet points in a presentation, that the cerulean blue that you used for the header is consistent with page 74, right? We laugh about it. And at the time, I remember being really frustrated by it. But this is the level of work product and level of quality of work that you're used to. Like, I know you and I, we talk about all the time when sometimes we work with some candidates or some counterparties, and they send us just some numbers scrapped together in an Excel book, and it's not polished, it's not right, or it's not fact checked. You scratch your head, right? You're like, how did they send this externally like this? It's because we're used to a level of work product that is professional and polished. And I think if you don't get that part early in your career, it's really hard to build that habit later on in your career. So, and I'm not saying this can't be accomplished at, CBRE or JLL. I think at the end of the day, it doesn't matter as much between banking and brokerage, other in that sense, as long as you go to a reputable firm or in a team that has, these high standards for you and where you're going to learn a lot. I think both are fantastic learning opportunities. I do think in banking, you're going to learn more on the corporate side. You're going to probably be a little bit more financial driven. On the brokerage side, you're probably going to see a bit more, especially on the deal and the asset level. Because at the end of the day, banking, you're more of an advisor than an actual broker. And if you are brokering, it's more about companies than the actual assets versus on the brokerage side. But again, both fantastic experiences. It just really depends on what you're looking for. And I would say group specific more than any, because as you mentioned before, right, that's the family that you're going to find and you're going to learn from. And so I'm sure there are groups within banks that are great, groups within banks that are not, and vice versa for brokerage shops.
For sure. No, I think that makes a lot of sense. As you think about it, when it comes to, of course, well, you bring up an interesting point, right? Being an investor, of course, trained a little bit to think more pessimistically as you look to acquire assets, deploy dollars that you eventually have to see back versus, of course, sales, advisory, banking, at the end of the day, taught to think more like an optimist, right?
That's a great summary.
Try quite a bit. But the systemic change and kind of the like differential in thought moving from one side to the other, how was that on your end when you think about juniors joining from banking coming over to this side? And now you've been investing for so long, where are you able to kind of like read kind of like not necessarily through the BS of a book or an individual hyping up a property, but would you ever be able to potentially like ever go back? Or it's really just like growth, like I've really kind of been trained to think now as an owner?
That's a great point. I haven't put too much thought into that before. And I think what you mentioned about, the pessimist, optimist side of kind of buy side, sell side is a very interesting, but also succinct summary of it. My general thoughts are I'm mostly buy side trained at this point now. And I think it just depends on what your goals are and what your fund is, right? If you've raised $20 billion real estate fund, right? Are you really going to be that selective in the real estate opportunities that you have versus if you are part of a $20 million family office, right? And it depends on your role within that institution. Are you on the buy side for acquisitions? And what really matters is that you don't make any mistakes, or what matters more is that you just grow quickly, right? Or is it a growth mode, or is it a holding vehicle? And, what does your capital want you to do? Or, are you on the sell side of it? You're on the disposition side of the principal investing side, right? And I had a conversation with someone earlier today too on what we think would make one of the best real estate teams. And we said, a combination of just attorneys and leasing folks, because attorneys are always trying to find reasons not to do deals, right? On all the risks that are present and why you shouldn't do things. Not all attorneys, right? But in general, their job is to protect and think about risks. And the leasing folks, they're always trying to expand. They're looking out new markets. They're the visionaries that see this empty lot and now imagine like a big shopping center, right? And that would be a good balance. And so I think to your point, not all of us have the luxury to do this, but if you could do a little bit of both and see both sides of it, I think that's super valuable, as with anything, right?
No, I mean, that makes a lot of sense. And at the end of the day, it's definitely something as individuals think about, well, careers are so long, right? So if you start off doing something, that doesn't necessarily mean that that's going to be kind of like an end all be all. I've connected with individuals, many of our coaches, and I was just at HBS connecting with a few last week, and they're telling me, Rohit, I have friends, classmates that still don't know what they want to do, have worked for multiple years, now at Harvard Business School, figuring it out and borderline graduating, and still have not figured out kind of like what exactly, like not necessarily is their calling, but what really, really drives them and what they want to do. Sure, they might have been making money, doing a job, something of the sort. Is really a career? I think it's all dependent, right? On kind of like what you find interesting and what really drives you. And then of course, understand that like, I'm not going to say do banking, sales and trading, move over to private equity, work at a hedge fund, but I brought on Adi a couple of weeks ago, one of my associates from Battery, who's now an investor at like an insurtech platform, more on the VC growth equity side of things. Long story short, he actually did quite a lot of it. He did consulting, he did banking, he did investing, he did a little bit of public, and then back to private.
Yeah. In the whole kind of Buddhist philosophy, right? I think it'd be super neat if we could all live a million lives and gain not only the skill set, but the understanding, the mindset, the philosophy, the perspective. I think that would all make us all not only better investors, but people, right? But unfortunately, we just have this life, at least that I know of. But to your point, careers are very long. I've had a lot of folks or candidates when we talk to them and we tell them about what we're doing, and they're a little hesitant, right? Because they're like, oh, well, you guys focused on net lease, and I don't want to do net lease for the rest of my life, right? And I have to remind like, well, you're 22 years old. Like, I'm almost confident that you will not be doing net lease for the rest of your life,
right?
Even if you join, right? And so it's just that perspective that your career is long term.
Totally. Don't bounce around per se, like doing it for 6 months and then going somewhere else. Maybe do it for at least a year, a couple of years, try it out, give it your fair shot, and then be able to figure out from there, like, okay, maybe I tried X, a couple of years, figured out it wasn't for me. Maybe I tried Y, figured out it wasn't for me, and it ended up at Z. If it fits the story, I think it really does fit the narrative. It makes sense more than anything in your mind and the interviewer's sake of discussion.
I'm curious from your perspective, has that changed at all? Now, I don't want to do like generational labels on things of like Gen Z versus millennial versus boomer or whatever, but the mindset of how long you stay at a job or what's considered that you start looking like you're a mercenary if you move around too much. Has that mindset changed at all in your opinion or what you've seen?
You could say we could almost go with that general like stereotype and cliche that of course maybe like call like Gen Z has been moving around too much. They don't want to work hard. I'm not going to say anything like that per se. But what I'm really getting at is that like I see both ways. I see individuals that have tried out banking, know that they don't want it, want to move to the buy side, want to go maybe corporate, startup. I see other individuals that are like, I literally did everything I could to get to where I am right now.
Yeah.
Why would I not stay and give it a fair shot? And to them, I'm like, listen, like honestly, this makes total sense. We can still train you up. And like at the end of the day, if you're looking to go analyst to associate to VP and you're like, I want to give it my all, well then let's double down, right? You're telling me that you want to play tennis for the rest of your life. Let's do private lessons. Let's get you going. Let's get you really good. So I see both ways, really, to tell you.
Yeah. Okay. And we've been thinking about this a bit too. And I think we're arriving at a similar conclusion too. And like, as long as you're deliberate or thoughtful about it, right? Because if you join consulting or investment banking and you realize month 3 that this isn't for you and not what you want to do anymore, don't stay 2 years just because you think it will look bad, right? Leave, like do something, but don't leave to join another bank if you knew that banking is not for you, or don't join another consulting firm if consulting is not for you. Like I think as long as you show that you're thoughtful and deliberate about it, I think we definitely view that as a positive.
100%. We're pretty big on the pursue what's interesting to you when it comes to industry. So even if you're doing banking or consulting, but you're working within tech, you're working within consumer, that will really drive a lot of those kind of like late nights and hours. But at the end of the day, of course, it's like really focused around specifically kind of that industry of choice that's interesting to you. We have a question from one of our participants here, an individual by the name of Larry Pang, who's basically asking about recruiting cycles in 2014, mentored others going through their own recruiting cycles. So basically getting an understanding of recruiting, right? Because now you've seen it, of course, having recruited to the buy side, and then of course you're hiring associates, right? And I'm sure even like kind of like VPs as a whole. You said it was 1 year out when you were doing it, when it came to buy side opportunities?
Yeah, it was, I still remember it was February of 2015, and we started banking kind of summer of 2014. So, or 6 months in the job. I think that's a great question, Mr. Pang. And, for me, I'm not as active in it as before, but I do think that it has, as you said, or as we started this conversation, right, it's shifted earlier. Like candidates, I know many are interviewing for their second jobs before they've started their first. I still remember we were taken by surprise when the recruiting season started in February because we thought that we'd have much more time, at least till spring before it started. I think that that's the big thing. And I think what we talked about too, that a lot of candidates are coming from a remote work perspective. But I also do think there's just general more, and you can correct me if you feel free to disagree. There's generally a lot more mobility and opportunities, right, that are available to candidates. Because when I was in banking, it was largely headhunter driven. You had a lot of headhunters that would just kind of feed you opportunities. And of course, you can seek them out yourself. And LinkedIn was starting to bloom then, and you could reach out to people and learn more, but there was no office hours. There weren't a lot of these services that are available today that teaches young people about these industries and about what is available out there and the opportunities. And so I think hopefully that it's not too overwhelming and that overall a positive for them.
100%. A couple other questions were surrounding this. How do you stay in a role for that long? And feel free to, of course, answer the parts that you can appropriately. But staying within a role for so long, thinking through, of course, like what keeps you excited day to day, of course, the sense of monotony that potentially takes over, like, or burnout that takes over any individual role, organization. But yes, I mean, you're close to hitting 10 years, right? For what it's worth.
I'm at 7 years right now.
Exactly. That's phenomenal. That's
which is
quite a bit.
20 years in millennial speak. Yeah, I think that's a great question. And listen, it's not like other opportunities haven't come across as well, but I think it's largely just, are you still learning is how I would answer that question. If people are also questioning whether they're at a role for too long, right? And I think, I've been lucky that, well, I guess twofold. Do you like the people you work with, and are you still learning? I've been lucky that I can definitively answer yes to both of those. When I joined Four Corners, we were just a handful of people in what used to be a former dentist's office, right? Wow. Now we're 30 plus people, former hedge funds office in Marin. And just seeing the type of growth that has occurred, it keeps it interesting. When I first joined, we were doing maybe a half dozen to a few transactions a year and only focused on restaurants. And now we're doing acquisitions and investments across restaurants, medical, automotive, even some other retail services. We're doing more dispositions. We're doing a lot of like interesting leasing and re-tenanting. I've now seen different capital markets projects that we've done, raises, bond deals, equity deals. And so and exactly as you said, now we're doing, there was a point last year where we were closing, I think it was a property a day, right? Wow. And so just the scale that we've evolved, the scope that we evolved, and just the team as well, it's kept things interesting, and it's still been a good learning platform. And I still enjoy working with the people. And so part of it is, hey, don't fix what's not broken type of mentality. But I think, it's just up to the individual to decide if what they're doing is still challenging to them, where they're still learning, and if they're still interested in it. And of course, if they still like the people they work with.
Yeah. Call it within work. We discussed kind of like what's exciting to you. Let's speak a little bit more about the market. Let's discuss a little bit more like what's exciting to you, like outside of work. Within real estate, doesn't have to be within real estate as well. Call like macro conditions, or just in general, like businesses and theses and industries that you've been pursuing.
Yeah. That's
a broader question, but
yeah. So I'm trying to think how to tackle that. I think the general market right now, we've seen a ton of volatility, right? Especially in the past couple of months, we've seen, the 10-year basically go over 100 basis points since August, after, coming down a bit since June, after rising a ton since the beginning of the year, right? The market has softened a bit from the craziness of the pandemic, where it dropped a ton. And it's just a lot of volatility and a good amount of uncertainty right now. And I truly think that these are moments where they're the most interesting opportunities that will come up, right? And I think it's also times like this where you set yourself apart as an investor, whether in your professional life or personal life, in your own PA or investments you do your own. When things are good, all boats rise with the tide, right? Like that was the era of meme stocks or crypto coins that were, you could throw money at anything and seem like a genius. But it's times like this where you're doing heavy underwriting, you're understanding an industry, you're talking to people and really understanding the business model. That's where all this stuff really matters. What I think is interesting is just probably yet to come. I think we're still seeing how a lot of this plays out, but I'm keeping a watchful eye, everything from real estate to equities to different, crypto tokens. And I think that this will play out. really interesting if, not say there's going to be a big recession or anything, but if something like that does happen, to see where kind of the idiosyncratic opportunities.
Nice. I like that quite a bit. And then within real estate as a whole, any opportunities that you've been pursuing, whether it be kind of like, I don't know, if you're thinking about like gutting warehouses, anything interesting, just from like, cloud kitchens, and of course, like thinking through like different angles there. But of course, kind of like, I'm not sure if it's just stuff that you've been like reading in the news as well, just stuff that's interesting personally.
Yeah, I read this quote the other day that I think really jives with our ethos. So I guess I'll first answer your question in the sense that, we're still kind of doing the same that we've always done, right? And the reason is, and the quote brought out that, hey, if there are two axes that you think about things, and it goes from simple to complex and interests, or, what I call like sexy and interesting to, not sexy and not interesting, you want to be on the complex and not sexy side.
Yeah.
So if it's too simple, everyone's doing it, right? Buying stocks, it's as easy as calling a broker or pushing a few buttons on your phone. If you really want to be a great stock picker or a good equities, investor, it's going to be a ton of work because everyone has the access now to the same information, to Google, to all this stuff. It's going to be really difficult. If you want to do, what's considered fun and sexy, starting a new social media app or, space tech, right? You're going to find a lot of competition there too. Bright minds that are willing to work about this because they want to talk about it or they're just passionate about it, which nothing wrong with any of this, right? But the kind of sector that we focus in, or the quadrant, is, hey, this is complex, right? Buying real estate is much more complex than buying shares of a company. Right? There's a lot of diligence that goes involved, transactional, title, property diligence, etc. Also, like what we buy in the net lease space, we started off buying Taco Bells, gas stations, auto repair shops, vet clinics, right? These are not things that people go to their next dinner party and brag about that they just completed, right? This type of stuff doesn't make the headlines of the Wall Street Journal, but this is the type of stuff that I think that kind of flies under the radar, that it's not as highly institutionalized. And it's where we've been able to make a profound, risk-adjusted return to our portfolio, in the sense that, I was completely new to this industry 7 years ago, or 7 years ago. And now, not to boast too much, but probably one of the most active and knowledgeable people within this space, right? And it's because, you carve out a specific niche that not a lot of people were running into. And I think that's always a good thesis to target. And so when I think about what we want to continue focusing on, I want to continue focusing on this stuff.
Totally. The expertise that you build within a space naturally just allows you to really get much better at it, right? At the end of the day, once you figure out what you really want to do, that makes a lot of sense. Josh, if you don't mind me asking, we had a couple of questions come in. Advice for someone who wants to move mid back office role to a front office role. And of course, I think about networking card, I think about signing up for office hours. I think about how to go about respectively having those conversations, will it be internally or externally, not to mention, of course, getting prepared, behaviorals, technicals, modeling, what have you. But love to get your thoughts.
Yeah, signing up for office hours, absolutely. But it's funny. I think you hit up all the things that I was going to say. Network, raise your hand, right? A lot of this time, like people are waiting for stuff to happen. You always give great advice to folks that I always hear is like, you got to be proactive. You got to raise your hand about it, right? I actually think one of the most underrated pieces of advice for this that I don't hear enough is first make sure you crush your current job. Yeah. Right. I think a lot of people, they're like, I'm in a back office or mid office role. I want to go in the front office. I don't care about this. I'm going to spend all my time trying to talk to the front office people and push and see if I can get a front office job. Right. Well, guess what? The first thing they're probably going to do is ask your manager how your performance is, right? Or assess, is this person excelling at his or her current job? I think the most important thing is if you excel at your current job, you will have opportunities open up for you. They will want to, if they are a company that values you and values human capital, they will want to retain you. They will recognize that you are in a seat that you can be in a better seat where you can contribute more, add more value, and grow more professionally. So I would say everything you said, but first focus on just crushing what you're currently doing. And then, getting as much exposure as you can, making sure it's known that you want to be in these front office and mid office positions, and being patient with it. It might not come tomorrow, but if you continue doing what you do, sooner or later, it definitely will come.
You got to eat what's on your plate first when it comes to, of course, doing well at that first job or that job itself. And that makes a lot of sense.
Yeah. You know me, I like my food analogies. That's even better. Exactly. I should just have you do all the analogies from now on.
Exactly. Can we speak a little bit more around work-life balance, but also at the same time, like being able to stay healthy, fit in the Goldman gym, right? That was like a big part of the routine. Like whenever you could.
That was the perk that really just kept me there, man. I think it's funny because our CEO always says that during the financial crisis, he lost 70 pounds. He was so stressed, right? It's really, really important. You only have one body in your life. And what was saying that young people spend all their life, or you spend your first half of your life accumulating wealth, detriment of your health. And then you spend the second half of your life burning your wealth to preserve your health, right?
Yeah.
Like, don't do that. Like, you want to be healthy. Like, I'm still going to the gym as much as I can, at least a few times a week. I know you are as well. Try to, eat well, sleep well, and, have positive relationships in your mind, have that balance. I think spiritual and mental health is something that's not talked about enough in our industry, but I think, maybe there's another opportunity for office hours there. It's therapy hours.
we definitely do coaching for sure, as in how to manage relationships, how to have conversations.
Yeah.
Within a team dynamic, but similar. Yeah.
Yeah. But I think that's all really important. And I think consistency is key, right? To riff off this fitness analogy, I always thought that investing is like getting in shape, right? As long as most people, when you learn the basics, right? As long as you know what to do, most people know how to be a good investor. Most people know how to get into shape, right? How to get in shape. You eat clean and you exercise, right? And what's the hard part is actually getting to that point and having the discipline to consistently go to the gym, even when it's early, to consistently eat clean and, not have like that junk food or that guilty pleasure too often, right? And it's the same how I feel with investing. Like, most people, they know what a good investment is versus a bad investment after you learn the basics of, how do I underwrite and how do I do this training and, what should I be doing, right? But it's when you raise a large fund and you have the pressure to deploy the capital because there's a return expectation, or you haven't done something in a while, or broker or whoever's selling this is a friend of yours and they're pressuring you to do it. Most of the people I know that have done bad investments, they knew they were bad investments going into it. It's like, that you were eating junk food. It's not like you accidentally ate food and you're like, I don't know why I'm not in shape. And so it's just about discipline and it's about consistency. And so I know life gets tough. I know work gets tough. I know there are never enough hours in a day. Well, guess what? Life's only going to get more tough. You're only going to get more busy. If you don't make time for wellness and fitness and health now, I don't think you're going to struggle. So it's just, having consistency and carving out time for it and being disciplined.
100%. We're going to make that little snippet and put it on our Instagram probably this weekend as individuals think about taking a little step back, because sometimes it's always go during the week, and then it's like go on the weekend, and then you never really take a step back, consistently like recovering and maybe trying to like maintain a schedule, but you're not necessarily like improving, right? And like taking a step back, being like, all right, like how can I actually like level up rather than just keep up?
I'm curious, Roy, because I know you're a guy that, I've seen your calendar, right? You're on the phone from 7 a.m. to 9 p.m. sometimes. How do you carve out, well, I guess one, what you decide to make time for, and two, how do you carve out time for that?
It's a good question. I think you figure out what like hobbies are interesting to you and like what you like to do in extracurriculars. Tennis for me, and then of course like spending time with friends, family. There were definitely times that I would like literally just plank after calls because I was just so dead. And so it's basically like probably not great because it was like burnout until you just, or like keep running until you just burn out, which is not great by any means. Now trying to figure out, of course, like, and you're a big proponent of this, like basically more and more business is done on the phone. However, at the same time, like enabling others to take some calls for you, some of the preliminary stuff, and then looping in for, call it like higher level calls, call it calls that frankly will lead to more, whether it be basically accomplishing your goal, right? Whether it be like, listen, like you guys have the intro call, I'll come in later, just like frankly, like a manager or a boss or a CEO would. That's the idea as we look to scale this organization, because it's true. Everyone will effectively like ask for your time. So how do you really go about, or in theory, right? Especially if you're like pretty decently good at what you do within your space, how do you protect and say no?
Yeah, that's saying no is, I think, a skill I had to learn. I think people with our personality, right? For a long time, it was yes, do everything, do both, yes. And I think saying no is actually, I've learned more and more powerful. So I 100% agree with everything you just said. And the only thing I'd probably add to that is one thing I'd learned too, is that not everything has to be urgent, right? Like usually someone's like, hey, can we get on a call today? Right. Well, you usually start and you have this plan. It's like, oh, well, I blocked off this time to exercise. I blocked off this time to spend with friends or family. And I guess I could push that off a bit and take this call. It's really important. Right. But at the end of the day, most things are not that drop dead important.
Yeah.
It's totally okay to schedule it tomorrow. Right. When you carve out that time, make sure you do leave it carved out.
Yeah. 100%. I'm probably going to be working out right after this, actually.
Well, let's do a Zoom workout.
Yeah. We can continue on the same one for any participants. Real quick.
We already have the audience.
Exactly. Real quick, some final last questions here. Advice you would have given yourself to Josh 10 years younger?
Yeah, I would say to just be very, very thoughtful. I think people give the common advice of, talk to as many people as you can and network. And yeah, that's great advice too. But I think just be really thoughtful and be okay with not always having a linear path. And I think that's something, that I'm still learning today, right? I know like a lot of folks, they're always worried, or not always, but they're very worried about what's my next role, what's my next job, what's my next promotion. They see their peers and their peers just got promoted, right? And or their peer is at another shop, another fund, or in the brokerage side or doing something else, and they just had a banner year and made double or whatever, more than they did, right? And to not get too caught up in the short term and to focus, long term. Are you still, one, just enjoying life, and two, learning and growing your skills as not only an investor, but just as a person, that things are long term, right? Because, it might be a promotion on face value, but if that fund disappears next year, or they might have made a lot of money this year, but, if next year they burn out or wash out, it's not good either, right? So, and if you know that you want to get somewhere, but you have to take a step down, or it's a lateral step, or it's going to not be that linear trajectory that you were envisioning, be okay with that. That's generally just what I would like to tell me, and just what I tell younger folks too. It's like, think about your career in a long-term perspective.
I love it. Thank you for that. Literally, and with that, we're basically at time. Did you have any final remaining thoughts, questions, anything of the sort?
No, this was really fun. I'm glad to have joined you on this, Rohit, and thanks again for having me.
No, of course. Great. Really, really appreciate you coming on board. Honestly, more than anything, let's definitely, we'll keep in touch, no doubt.
I'll see you at the workout.
Yes. Yeah. We'll see you on the next one. Have a good one.
Take care. Thanks,
Rohit.
Rohit.
Take care.